Hello, today's Wednesday, March 26th, 2025, and I am Jason Shapiro with crowdedmarketreport.com. So most of the time I do these public videos on Thursdays, but I just thought today had so many great examples about trading and markets that I just wanted to do it today. And we'll start with the stock market. So pretty big down day today. And this is one I talk about all the time. The NASDAQ was the weakest index all day. Okay. You want to be, if you're short-term trading or day trading, you really want to be trading with the NASDAQ. If it's the weakest index, you want to be looking to short over the course of the day. And if it's the strongest index, you want to be looking to go long. This does not work every single day. It's clearly days when the market goes up when the NASDAQ's the weakest, but I have been looking at this for over 30 years, every day. And I can tell you that this is the greatest intraday indicator that I've ever found. Again, every day? No, but a large percentage of the time. And not only will it help you make money, it will keep you out of a lot of trouble too. It would have kept you from trying to short yesterday because the NASDAQ was the strongest index. And it would have kept you from buying today because the NASDAQ was the weakest index. So that's the first thing that I thought was real obvious today. And the NASDAQ was down right from the get-go. At one point, the NASDAQ was dropping earlier in the morning, and the Dow was up 200 points. And then the NASDAQ kept going down and brought the S&P, and it brought the Dow down with it. It's the highest beta index. It's the most volatile stuff, which is what highest beta means. It leads the market the vast majority of the time, on many different time frames, but in particular on an intraday basis. So that was the first thing I wanted to get into. Well, was there news today? Sure, we had some economic news that arguably was better than expected. We had Microsoft news where they say they're cutting back on their building of their centers or whatever, but are you really going to trade off of that? I mean, it's the market that matters. And that gets to another point. In yesterday's video, I was actually talking about how it looked like the market was trading very well off that low. And then I thought that there was a possibility that the bounce was going to be stronger than people were expecting. That still might be the case, but clearly that wasn't the case today. So who cares what I said? The market was telling you today exactly what the story was by the NASDAQ leading. It was telling you it was a weak day. Does that mean tomorrow it has nothing to do with tomorrow. Does that mean tomorrow can't be a strong day? And maybe this was just sort of a bear trap for people who were trying to buy this rally and now they got scared out and now we can continue? Sure. I mean, S&Ps were down 75 points at one point today. How many people were holding on to their longs with the S&P down 75 points? Very hard to do as a trader. So maybe they got sort of taken out and maybe now we can resume this move up. I don't know. That's what I think. But again, the market will tell you what to do, not Jason Shapiro. And not anybody else for that matter, right? The market knows. Everybody else is just guessing, right? Another thing today that I thought was very interesting. So I've been in this yen trade. Okay, I've been short this yen, right? And the reason I'm short the yen at the end of the day is the same reason I make any trade that I make, which is that it got very crowded here. We had a news failure on this day. I get short. That's my process, okay? And if it closes through that high, I get stopped. And if it doesn't, then I sit on it until this crowdedness gets out and I take my profit. That's it. That's my process. But I'm as guilty of this as just about everybody. And I got into this in the weekly report this week a little bit. But in the meantime, while it's going on, right, you build these arguments in your head. The argument I built in my head was, hey, the yen has a tendency to go up when the stock market goes down, right? It's a flight to quality thing. It's a carry trade thing, so to speak. And so that's kind of what it does. And therefore, when the stock market goes up, the yen can go down. And my idea was, this is a better way to get long the stock market. But the truth is, it really doesn't work like that, right? I mean, granted, the stock market did go up while this was happening, but these intraday moves, we had this day here where the yen went up a lot. That was on an up stock market day. We had yesterday was an up stock market day and the yen went up. And then today, the yen went down with the stock market now. So it's so easy to sit here and be like, like yesterday, okay, the yen went up, the stock market went up. And I'm thinking, oh, I can make money on my yen short if the stock market goes up. Well, I lost money on my yen short when the stock market up. So we say, oh, well, the yen is saying that it's not doing that, so get out of it. Or, hey, if I just want to be long, just get long the stock market. Think about if I did that yesterday. If I got long the stock market instead of my short yen, right? Which I would have nothing to do with my process. It's just reading too much into it, into the daily movements, right? So much of the daily movements are just random. That would have been horrible if I did that. Stick to my process, and that's what everybody should do. Stick to your process, not my process. I'll stick to my process. You stick to your process. That's what's going to work over time at the end of the day. And look, could this yen go up tomorrow and stop me out or whatever? Sure. But that's not the point. The point is, had I not stuck to my process, I wouldn't be in the money on this trade. I would have made some stupid trades, and I would have ended up losing money rather than making money on this trade so far. You got to stick to your process. That's the second lesson here that I saw today that I thought was important. And the last thing I wanted to talk about was this copper move. Copper had a big sort of reversal day today. Didn't close down, but had a big reversal day today. And we had news last night that set this thing off. Over here, right? News came out that, okay, they were going to, do tariffs on copper, and copper ripped higher on that. And the point I'm trying to make here is there have been rumors about tariffs on copper going on now for months. I mean, copper is at a new all-time high, right? These rumors have been going on this whole time, right? And then the news comes out last night, they're going to do tariffs on copper. Copper spikes higher. You don't buy that, right? They call it, buy the rumor, sell the fact for a reason, There's a reason that people say that. And this is the perfect example of that, okay? You're not going to wait. You've been waiting this whole time until it was confirmed that there were going to be tariffs on copper and you're going to buy it then? It's not how markets work. Markets are a discounting process. You want to be, had copper been crowded long, which it's not, I would have been looking to short this thing. And I'm not saying copper can't go up from here. It can. But buying it on that news after it's been rumored for 2 months already, and then the news comes out, and to buy that's just a mistake waiting to happen. And it was a mistake waiting to happen because we had a reversal day. So I think that's important. Could it have kept going up? Sure. But from a risk reward point of view, you're not going to buy a market that's been up for 2 months after the news comes out that the news has been rumored for 2 months. That's just not the way that this is going to work over time for you. I promise you that. So anyway, I thought that was important today too, to pay attention to something we can witness in live time that, like I say, people talk about sell the news all the time. Here it is. Witness it in live time, right? Other than that, today was, I would say the bonds, were a little bit of a surprise because they got no bid. Now the economic number was a little bit stronger, so maybe that's why, but no bid here as stocks were sort of plummeting a little bit. Interesting that bonds are so weak. And, lastly, obviously Bitcoin, which came down today. Today would have been the perfect day. I've been talking for a while here about how people want to argue Bitcoin is something other than just another risk asset. And it's really just trades like a risk asset that might as well be called the NASDAQ, right? Today would have been the perfect day for it to not do that, right? With the NASDAQ down so hard. Bitcoin had gone up today, then we could make the argument that, hey, it's becoming something other than a risk asset. It's becoming its own legitimate thing. But again, it didn't. So to this point, we have to continue to consider Bitcoin just another sort of NASDAQ risk asset until it proves otherwise. It has not proved otherwise yet. As soon as it does, I'll be the first one to talk about it. But to this point, no. Okay. So anyway, that's what I saw today. I think there were a lot of interesting things in there that sort of epitomize how we want to approach the market, with this NASDAQ lead thing being very valuable, with this yen thing showing us that there's so much randomness that what you think might be moving and is not, these correlations, that you think you're trading. It's like everybody knows the correlation, yen, to stocks. So stocks are going down and the yen's down. So what, you're going to buy it? You think the market's that easy? You don't think everybody in the world sees that stocks are down and that the yen is down? And people tried it a couple times here. They tried it here. They wish they didn't. They tried it here. They wish they didn't, right? the market message is much stronger than you being able to look and say, oh, stocks are down, the yen should be up, I'm going to buy yen. Over time, that's going to be a very bad idea. The market's going to do what it's going to do. These correlations break down all the time. It's the thing about correlations. It's not like they're every day. They're done. Last thing being the copper. Don't buy bullish news after it's been rumored for months. It'd be one thing if it came out of nowhere, right? If copper on lows and we got some bullish news and it gapped up, okay, that's one thing, right? But it's quite another thing when it's been moving up this whole time. So anyway, those are the things I saw today. I hope that helps. Please like the video if you like it. Please leave questions and comments. I'm always happy to hear those and talk to people about those. And check us out in all of our forums, crowdedmarketreport.com, on Twitter, Substack. Check that out if you like. Otherwise, I hope everyone's doing okay, and we will talk again soon. Thank you. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.